Avoid overtrading. Quality over quantity. Overtrading is a common mistake where traders excessively execute trades, often due to impatience or the desire for constant action. This point stresses the importance of quality over quantity in your trading activities. Here's a broader explanation. Overtrading occurs when a trader enters into positions too frequently or with excessive size relative to their account. This can be problematic for several reasons. First, it increases the transaction costs associated with trading, such as spreads and commissions, which can eat into your profits. Second, overtrading can lead to a lack of focus on high-quality trading opportunities. By constantly being in the market, you might not give your best attention to the trades that truly meet your criteria. Quality over quantity means prioritizing the trades that align with your well-defined strategy and offer the best risk-reward potential. Instead of seeking constant action, you patiently wait for the right setups and only execute trades when the conditions meet your predetermined criteria. Overtrading often stems from emotions like impatience or the fear of missing out, FOMO. Traders might feel compelled to trade frequently to feel active or involved in the market. However, this can lead to poor decision-making and losses. By avoiding overtrading and focusing on quality, you can maintain discipline, minimize transaction costs, and improve your chances of achieving consistent profitability. It's a reminder that successful trading is about making well-considered decisions, not about the quantity of trades executed.